Hi, this is this week's video analysis for the FX majors and dollar index going into the shortened week from the 2nd of January 2019. Is it all about the dollar? Well, it seems to be at the moment. We've got the weekly chart in front of us. We've seen this recovery to the upside of this major sell-off. We did stall close to the 61.8% pullback level at 97.86. We've now broken the wedge formation to the downside. We've seen a retest of the breakout level. There's no clear indication that this move lower is coming to an end. 93.84 is the projected target for the wedge breakout. If we go to this time frame, which is the daily chart, we can see that we've now broken. We had a series of higher highs and higher lows. We've now broken that. We've now got lower lows and lower highs. Like we said, 93.84 is the wedge target. It's pretty close to this 261.8% extension level at 93.67. These lines on the right hand side, these dotted lines, are bespoke support and resistance levels. So you can see 94.86 pretty close to the 161.8%, and then potentially we could see a break further than this 261.8% extension down to our bespoke support at 92.61. To the upside, I see limited dollar buying at the beginning of the week. 96.20 is our bespoke resistance. The previous swing low, which was support, now becomes resistance, is at 96.17. So looking to basically sell into early dollar rallies, if we get any, at the beginning of the week. So reflecting that back onto euro dollar to start with. Weekly chart, bullish outside candle, but we've seen a prolonged period of consolidation in this major currency pair. If we break that down to the daily chart, we can see that this area was previous support. It now becomes resistance. However, we are making higher lows. This looks like an ascending triangle formation. A break, or a clear break, I should say, of 114.80, and the measured move target is going to be 117.26. To the downside, early next week, our bespoke support is located at 114.10. So we are bullish in euro dollar. Sterling dollar, not so bullish, should we say. We've seen a breakout of this potential wedge formation. We've seen a rally up to the 161.8% extension level, 128.15. We had bespoke support there yesterday at 128.14. It's been rejected, and just the how aggressive this move lower, this correction lower, has been, makes us wonder if we're actually going to hold on to this formation. I think more likely than not is that we'll see a retest of this this breakout line here, which comes in around about 125.05 at the moment. Could potentially make a double bottom. Obviously, if this move to the downside takes some time. So our immediate bias, we have got bespoke support at 127.01. The immediate bias has got to be really to buy into intraday dips. However, if this breaks, then like I said, I think 125, the figure, is going to come back into play before we see the next move to the upside. Our bespoke resistance is at 131.45, which is pretty close to this wedge target as well, which comes in at 131.75. So we are bullish over the medium term, but I think we're going to see a more aggressive correction in sterling dollar. And using correlation, euro yen, sterling Aussie, sterling CAD, they're all looking a bit toppish at the moment, with regards to sterling strength anyway. Dollar Swiss, not very easy currency pair to analyse at the moment. We are short. We had that inverted hammer posted on the week 12th of November. We got some trendline support at 97.14. Can't really see any clear indication why this move lower should come to an end. If we go to this time frame, we can see we've got bespoke support at 97.62. This is close to the 161.8% extension level at 97.73. What I don't like basically in this continued bearish bias, apart from the fact that I think the dollar is going to move lower, is this choppy price action. Normally, if this was to be regarded as a third wave, it would be impulsive. So we'd see impulse move to the downside, correction, impulse move to the downside, correction, impulse move to the downside. But I think at the beginning of this week, we're going to be able to play dollar Swiss both ways. Excuse me. 97.62 support, 98.92 resistance. Dollar yen. Got some trend line support, 107.18. This is off the monthly chart. If that breaks, I think we're looking for a lower ABCD formation, which will move us down towards sort of 92.25 area. If we go to this time frame, which is the weekly chart, we've got some trend line support, potential head and shoulders. So left shoulder, head, right shoulder, neckline. 107 the figure is the support level, which is close to the 78.6% pullback level. It's at 106.75. Would we sell into this current sell-off? I don't think so. We've got the 50% pullback level at 109.59, and if we go to the weekly chart, the daily chart, excuse me, then we've got the 161.8% extension level at 109.42 from this initial sell-off. So we're still bearish in dollar yen. We're looking to sell into rallies this week. 110.50 is our bespoke resistance at the moment. Dollar CAD keeps on grinding higher. Monthly chart shows a channel formation. No real clear indication that the move is coming to an end. However, if we look to the weekly chart, then we've got a 161.8% pullback level at 136.85. Now, the reason why we're expressing caution in dollar CAD at the moment is obviously we've got that dollar bias anyway, but we've also completed a perfected 9 on the daily chart, which will normally highlight or indicate at least a correction to the downside. So the initial bias is still buying on dips, but we've only got support down at 133.60 at the moment. Like I said, we've got a 9 count up here. We're going to look at intraday time frames to see if we're going to form some sort of a wedge formation and potentially break lower. So the scope for mild buying in dollar CAD, I think, at the beginning of next week, but I think it's going to be limited, like I said, at least with that bias in the dollar index as well. Aussie dollar, let's just open this up a bit. Monthly chart, we can see we're consolidating around that trend of higher lows, but we're very likely going to we did post a bearish outside candle in December in Aussie dollar, which holds a mild bearish bias. If we go to this time frame, this was our bespoke resistance. We just missed it, but there's potential of a double bottom here. So again, a little bit of caution going into next week. The daily chart highlights 161.8% extension level at 70.45. The bias at the moment, similar to a flipped bias, if you like, on dollar CAD, is that we have to be selling into rallies where we have to be buying into dips in dollar CAD. 71.10 is bespoke resistance. Now, if the stock market continues to fall aggressively, then Aussie dollar, in particular Aussie yen, should continue to move to the downside. So at the moment, we are selling into rallies, but we're wary of 161.8%. We're wary of a potential double bottom formation, and we're wary of that dollar index. So like I said, probably similar to sterling dollar, there's better currency pairs to play at the moment than Aussie dollar, I believe. Euro sterling, we seen a period of mixed volatile trading, spikes in either direction for the last 4 trading days. We're still looking for a larger correction to the upside in an ABCD formation towards 91.37. At the beginning of next week, or this week I should say, we've got bespoke support located at 89 the figure. Euro yen, we broke the triangle formation to the downside. The measured move target for this this formation, I should say, is at 124.10. No clear indication that this sell-off is coming to an end, but we've also got a bullish bias in euro dollar at the beginning of next week if we can break that ascending triangle formation. And we've also got that 161.8% extension level in dollar yen. So do we really want to be selling at the open? No. Bespoke's resistance is located at 127.11, and that's pretty close to this previous swing high. So at the moment we're still bearish in euro yen. Like I said, the medium term target for this currency pair or this currency cross is at 124.10. Okay, I hope you found the video analysis beneficial and educational. Wish you all the very best for a prosperous 2019. Many thanks.